The US and global economy is in shambles right now due to the coronavirus outbreak. And today I'm going to talk to you guys about my predictions, but more importantly, about what you can do as a younger individual or regardless of your age or as a family, and how to get through a recession if that does occur, and kind of the steps to take in order to learn how to invest during or post-recession in order to take advantage of it, and try not to panic and let those thoughts take over your longer term strategy. I'm Michael Elefante, and I typically talk about or do videos around personal finance or real estate investment and other things of that nature. But if you like these type of videos, please hit the like button and subscribe below. Can the coronavirus cause a recession? And I think it most certainly will cause a very, very sharp contraction, as you have already seen that happen today. The Dow and other large index funds have shaved off around 30% from their all-time highs just a few weeks ago. And I think it will go down much further than that. And today we're going to talk a little bit about why and how that's possible. So let's just first start with some examples of, industries or companies that will certainly be affected and already have been affected. Today we're in much more of a global economy than we were a century ago, around the times of the Great Depression. So effects that happen in other countries such as China or other places will affect, the US economy and vice versa. So think about the tech industry, for example. For a lot of parts that are manufactured in China or Taiwan or other places overseas, and those factories are being shut down or run at 50% or less capacity due to the coronavirus outbreak, that is now going to slow the production of new hardware or whatever companies are manufacturing. And in 2 to 3 months, when inventory dries up with local distributors, that is going to affect supply chain down the road. So not only are we seeing a massive sell-off in market for not only large banks or investment groups or individuals seeking to hold on to cash and brace themselves for a potential recession, but in the next few months, when customers go to order parts or hardware, gear, whatever they get from these manufacturers, there's going to be a massive supply chain issue and back order for many of these, either parts or products that are being produced overseas. And even if they go back into production, full swing, in the next few weeks, there's still a month that is going to be a giant dip in production that's going to cause a dip in supply chain and a back order for all orders that are being placed in the near future. Manufacturing facilities across the world, especially in the US right now, are being shut down or run at definitely below maximum capacity, which is going to hurt, again, supply chain moving forward. Entertainment and tourism, you guys have all seen, they shut down the NCAA tournaments, they ceased all NCAA spring sports, the NBA, NHL, MLB, all professional sports, MLS are all shut down right now. They're avoiding any gatherings larger than 50 or even larger than 10 people. Restaurant and bars are being asked to shut down, and it's just crazy. And I get it. I get the social distancing, so we're trying to reduce the peak amount of coronavirus cases that happen. But this is definitely going to have a very, very large impact and continue to cause us to likely fall into a recession. Think about how this affects consumers too. So small businesses and the service industry, people that aren't on full annual salaries are now out of work and need to seek employment, and it's going to be a period of time where employers are more likely to lay off workers than hire workers in specific industries, which is going to hurt consumer spending and confidence and cause a further market sell-off, because if consumers aren't spending and also aren't able to go spend on places like Disney World or go to a baseball game or things of that nature, those industries are all going to suffer. And again, it's just going to create a snowball effect. So many people have been predicting a recession for a few years now, and it's really more founded on national debt and organizations leveraging too much of other people's money. So really it's just a big debt problem that we have, not just in the United States, but in the world. And if you think that the coronavirus is pretty much the needle that is going to pop this bubble. So that's my prediction. I'm a big fan of Robert Kiyosaki and Peter Schiff, Ray Dalio, and they've been talking about this for several years now. And this could just be the thing that pricks the bubble. So I would definitely keep an eye out the next few quarters, because it's not just the market sell-off today, and I wouldn't jump in and investing in stocks today just because you see, okay, it might be going back up a little bit. But the next quarter or two, again, that supply chain is going to hurt. And not just the supply chain issues, but the shutdown of all businesses is going to hurt quarterly profits and the following quarter's outlook. And whenever that happens, there are greater sell-offs in the market. Companies will shrink, seek bailouts from the government, which, depending on your opinion, is a good and or a bad thing. But overall, the market will suffer and likely to continue to go down in drastic fashion over the next 3 to 6 months. And who knows how long it'll take us to get out of that. Just to further elaborate on how a recession works, for those who are not as familiar, and how a recession could actually turn into a greater, what we would call a depression. Many of you are familiar with the Great Depression that happened in the 1930s, where unemployment went up to as high as 25%. But companies with weak balance sheets and not a lot of cash, they'll go bankrupt or, again, seek government bailout if they have no customers to sell to. And in this case, think about the airline industries or cruise lines or entertainment industries. If they cannot actually hold events, or they have no customers, or they have travel bans, things like that, there's no money flowing in, and they still have to pay employees, many of their full-time employees, and continue with the rest of their, business as usual. And they're just bleeding cash right now. And if they don't have a rainy day fund, they're probably screwed in the interim, and it will be very difficult to crawl out of those situations. It happened with a lot of the banks in the 2008 financial crisis, when there was a lot of bad mortgages out there, and the bad rated mortgage bonds and mortgage-backed securities, which were just derivatives created from the mortgage debt that consumers had in the market, and it was resold out to the market. I mean, it was crazy. And then that's what people like Peter Schiff and others had predicted, is that a bubble will eventually fall when people miss mortgage payments and go into foreclosure. The market tanks, and all of a sudden people can't sell their houses because they're worth less than they were when they bought them. And that's what created that giant snowball and recession there. But again, companies start bleeding money and have to lay off workers, and now unemployment increases. And these laid off workers now have no immediate income and struggle to pay rent, struggle to pay their mortgage. They stop buying things like new cars. So then all those businesses that they're paying money to now struggle because they don't have the consumer spending to have that income each month, and their revenue goes down. Consumers rush to stock up on essentials during a recession or in fear of a larger depression. And the coronavirus has spiked some craziness, and you'll go into a local grocery store and you can't even buy toilet paper. I mean, all the meat and other essentials, pasta, canned vegetables, all those things are completely wiped out. And I don't think that will continue, but just think about how fear of the stock market crashing and fear of a virus, fear of the unknown, is causing us as consumers to freak out and go spend our money to basically have a doomsday kit in our house. And I don't blame people necessarily. My wife and I have gone out and stocked up a little bit on frozen foods, not really because we're afraid of the long-term effect, but we're afraid that with the rush with other people going and having similar mindset as they're trying to stock up, that we still need to stock up a little bit in case there's nothing to buy when we're actually out of food. So it's just a trickle effect, and the snowball is going to continue to grow. Again, large companies will eventually seek bailout from the government. Airlines and other large industries are doing it right now, which really goes against the true nature of capitalism. Again, there was a lot of people frustrated when the government bailed out the banks in 2008, 2009 timeframe, when a lot of those banks thought they were too big to fail. And once they were kind of screwed and all the mortgage industry collapsed, the government came in and had money that the Fed essentially printed and bought government bonds and other things back, and even bought mortgage-backed securities, and try to help take those off their balance sheet and help them have more capital to get through the recession that they were going through. But again, in past, consumers become nervous that banks will not have their money. And if you guys don't know how banks operate, for every $1 that you put in a bank in a checking or savings account, they're lending out $9 out, because that's how they make money. They're not making money by holding the money for you. They're making money on lending folks money for a home purchase, a new car, other consumer spending, credit cards. They do not actually have the money that you think they have in their bank. If you have $100 in the bank, you probably only have $10 that is actually in there. So think about when everyone in the United States rushes to a bank to withdraw cash. And again, this isn't as prevalent today just with the digital banking world that we're in, but what happened in the Great Recession, Great Depression, is everyone rushed banks to take money out because they were afraid they wouldn't be able to the week after, and so created a rush on the banks. The banks all ran out of money and closed. So that's what kind of started made the recession turn more into a depression. People didn't have money, unemployment rate was high, companies were failing, and it just, the snowball effect continued. And the government will bail out companies again with reserves, and the Fed will literally print money to buy back faulty loans or bonds from the government. And printing money and slashing interest rates is the Fed's solution to spur borrowing, investing, and economic growth. And these things all help, are attempts to help end a recession. But the problem that we have today is the Fed has already taken some of these actions this week and the prior week. And those are usually tactics to help end a recession. But we're taking these, basically making interest rates near zero or at zero. So if we continue to fall into a recession, the Fed's going to have little to no power or tools left in its pocket to actually help us get out of a recession. So that's creating a major potential problem that could potentially keep us in a recession for longer than we're all hoping for. Again, as the Fed prints money that basically devalues the dollar because there's more dollars fluctuating throughout the U.S. economy. So that's why you'll hear many people say savers are losers, because over the long term, if you just have money in a savings account and it's not invested in something that's increasing over time, while the Fed prints money, there's more money fluctuating again, which devalues the dollar. That's what you see or hear the term inflation, because things become more expensive because there's more money fluctuating and people can afford to use more US dollars to buy any particular item. So the issue with printing money during a recession is stagflation could occur. And if you're not familiar with stagflation, it's persistent high inflation combined with high unemployment and stagnant demand in the economy, in the country's economy. So stagflation, basically the economy's at a halt, and while we're printing money and trying to pump it into the economy to increase consumer spending, people are still scared or just hoarding that money, and they can't spend it anywhere. And we're basically stagnant in the place that we are. So on a more important topic, what can you and I do today to ensure the longevity of our money and well-being during and throughout a recession? So step number one, if you do not have a rainy day fund or an emergency fund, you should have that as priority number one. So make sure you have 3 to 6 months living expenses saved up. Now, for many of you, you're like, okay, well, I don't even know how much I would need during that time. So we did a video on a budget a few weeks ago, on a personal budget, and how important that is, because it tracks your spending on essential spending and variable expenses that may be, wants and not necessary. So you do need to understand what your essential budget is, right? So how much do you need to pay for rent or your mortgage cost? Do you have a car payment? Do you have student loans? How much do you spend on food each month or transportation? What are the essentials that keep you afloat? And you need to save up 3 to 6 months just in case there is major unemployment and you may get laid off, or in a particular case where we're being asked to stay home and not go out, so maybe you can't do your side hustle as you were before. Whatever it may be, it helps to have that padded 3 to 6 months just in case the worst were to occur. Second, cash is king during this time. So again, if you're young and you have a bunch of money in your 401k, we'll get to that in a minute, but save up as much cash as possible right now, because all the red and down arrows you're seeing in the stock market every single day, think of that as you're going into a store and they're on a liquidation sale and they're trying to get rid of inventory while everyone else is selling off. Again, cash is king, and you can, when the market bottoms out or starts to rebound, you're basically going to be getting stocks or items at a 50 to 75% discount, or maybe even greater for some companies than they were at their all-time high. So if you believe in the U.S. economy and the greater, humanity around the world, we're not going to go to zero, so try not to panic. Step 3, you can invest in precious metals, specifically gold or silver, specifically gold. And many of you ask why. Gold actually typically goes in the opposite direction during a recession. Gold will actually go up in most cases throughout history. And this largely has to do with when President Nixon took us off the gold standard, I think it was 1978, and made the US dollar the reserve currency of the world instead of gold. So when this happens, now the Fed can literally print money, which creates inflation, literally devalues every dollar that you have in your bank account that's sitting there. But again, as we talked about inflation before, when the Fed prints money, you're essentially losing money because your dollar is no longer worth $1. So if you invest in gold, there's a finite amount of gold in the world. It's a natural resource here on Earth, and same with silver and other precious metals. But as they're printing more money, the price per ounce of gold is actually going up because people are still valuing gold, at the level it is, and they're going to be willing to pay more for that gold over time. So a lot of people invest in gold, and real gold, not paper or fake assets, in a fund somewhere. People actually purchase real gold coins or gold bullion and actually store that gold at home or in a safe somewhere, either hold it forever or sell it later down the road as the price of gold continues to creep up. Again, thinking long term for retirement accounts. If you have a 401k, an IRA, or a mutual fund or something of that nature, and again, the point of those investments are to last you until age 55 to 65 years old. So they're supposed to weather economic downturns and ride the wave back up. So the whole point of those plans is to continually invest over time and don't change your strategy. And those, market managers or fund managers are supposed to appropriately, buy and sell during times like this where hopefully you can weather the storm. If your belief is to put your money in a 401k or other, stocks or mutual funds and ride waves throughout time, don't freak out and sell it for that purpose, because again, if you're just going to sell and then all of a sudden the market goes back up and you're afraid to invest until the market's at all-time highs again and you think it's going to keep going up, then you're going to be screwed long term. Again, what Warren Buffett famously stated was that his company and himself, and again, Warren Buffett is the most successful investor of all time, undoubtedly. So he simply said, we attempt to be fearful when others are greedy and be greedy when others are fearful. And this is a perfect example of that statement. Is when the market's tanking, I guarantee you Warren Buffett is, if he's not buying today, he's holding onto a large sum of cash. And when the market continues to bottom out, towards bottoming out, he's going to be pumping money into all his favorite companies that he believes in long term. Again, he's not looking to make a buck in a week. He's looking to make, tons of money over the course of multiple decades. That's how he's gotten to where he is today. In closing, don't panic. During good times or a roaring economy, it's human nature to assume that things will be good forever. But the same is true during bad times in a falling economy. And with thing like a coronavirus spreading throughout the world so rapidly, people assume it will be bad forever. Try to be even keel. If you're younger, and like me, this is really the first time as a grown-up or professional living through what's going to be likely a recession. Just weather the storm, learn from it, save up as much money as you can right now so you can ride the wave back up, because it is inevitable, whether it happens tomorrow or whether it happens 1 or 2 years from now. Again, if you look back in history, you get maybe once in a decade or a few times in a generation opportunity to invest money in a market that has bottomed out and now will potentially be roaring or back to all-time highs in the next several years or decades to come. Guys, thanks for watching. Michael Elefante. And if you like the video, hit the like button. You're welcome to subscribe. You just get notified when I post new content. But thank you guys again, and be safe out there. And again, cash is king right now. Don't panic. Save your money for the long term and get ready to invest in stocks in the market while everything is on sale.